You want to give your child or spouse a financial head start, a lump sum to get them going. If your money is in mutual funds, your first instinct is probably the most common one. You log in, you hit redeem, and wire the cash. But look what happens when you redeem. This chart represents your portfolio. You trigger immediate financial damage as exit loads and capital gains taxes are sliced off the top. Consequently, your compounding momentum flatlines, permanently losing future growth. Cashing out to give a gift means actively destroying a portion of the wealth you are trying to pass on. For years, handing over mutual fund units directly was a bureaucratic maze. The process was only straightforward if you held your investments in a specific demat account. The problem is, the vast majority of retail investors in India hold their mutual funds via a standard statement of account, or SOA. And for SOA investors, moving units meant you had to sell them first. That barrier is gone. The market regulator, SEBI, recently relaxed the transfer rules. This diagram shows the shift. While direct transfers were previously restricted to demat accounts, standard SOA units now follow the same rules. You can transfer your holdings directly to a family member without liquidating a single rupee. By bypassing the sell button, the regulator has created a legal mechanism to move wealth between generations while keeping your market position intact. Now, sending cash on a digital payment app takes about 3 seconds. Moving mutual funds requires a lot more precision. Because the system needs a clear paper trail to prevent money laundering, the absolute first requirement is identity. Both the person giving the units and the person receiving them must have their KYC verification fully updated. This diagram illustrates the next structural hurdle. You cannot simply send units to a bank account. The receiver must open a folio with the exact same asset management company. Both folio and KYC profiles must match perfectly before the fund house allows a connection. Mutual funds prioritize strict identity tracking over user convenience. Nailing down this prep work is the most critical phase of the transfer. If you are in the minority using a demat account, your execution is familiar. You initiate an off-market transfer directly through your broker or depository participant. But for the majority holding SOA units, you will process the gift digitally through registrar platforms. You'll log into a registrar portal like CAMS, KFintech, MF Central, or directly on the Fundhouse website and look for the transfer interface. Once inside, you have to manually select the exact scheme, specify the volume or percentage of units you want to move, and enter the recipient's PAN and contact details. SEBI removed the regulatory block, but the execution is entirely on you. One mismatched PAN, an incomplete KYC, or a locked unit, and the entire system will reject the transfer. There is a catch you need to watch out for. A tax-free transfer does not mean the tax disappears forever. This timeline tracks the investment. You pay zero tax today upon transfer, but the tax liability carries over to the new owner. They inherit your original purchase price, and when they eventually sell, they owe capital gains tax calculated from your first investment day. Additionally, you need to be careful who you send this to. If you gift units worth more than 50,000 rupees to someone outside your immediate defined family members, the recipient will get hit with an immediate gift tax. The rule change helps you avoid the penalty of liquidating today, but it does not erase the ultimate tax obligations tied to the asset. Investors in India can now treat mutual fund units as movable family assets. This newfound liquidity gives you a highly flexible tool. You can now strategically shift wealth across your family to support a child's education or bolster a spouse's long-term portfolio. By avoiding the sell button, you preserve the original cost basis, and you protect the mathematical power of compound interest for the next generation. Stop cashing out your investments to give gifts. Put the required paperwork together, use the SOA transfer route, and let your family's wealth continue to grow uninterrupted.
रिस्क सिर्फ मार्केट में होता है, प्लानिंग में नहीं। DGN कैपिटल मैनेजमेंट के साथ स्टॉक मार्केट, म्यूचुअल फंड और इंश्योरेंस। AMFI IRDAI सर्टिफाइड। योर सक्सेस आर प्रायोरिटी।